I'm Chris Dusting. I'm Dick Champion. I'm Chris Dusting. And I'm Dick Champion. We're a small team. New house and land packages versus established houses. New versus old. It's the age-old debate. Those stories and more coming up on a couple of minutes. Oh, and we're going to take a look at Peter Harvey's mailbag. Peter Harvey's passed on, mate. Oh, that just means it's an extra full mailbox, mate. No one's checking it. Mate. Sorry. By the end of this video, we will reveal the 3 key elements that, if you've purchased already, or if you're currently in the market, or you're considering property investment in the future, you don't want to miss. Tonight, in an Australian first, we will start to lift the curtain on the profit-driven bias, empty promises, tainted data, group buy bus rides, to unveil our 3-month-long data-driven investigation into the effectiveness of purchasing a new and house and land investment property in Australia. I am no stranger to going to where no other investigators dare to go. And today will be no exception. Are you considering a new house and land package at an investment in Australia? Yes? Then you do not want to miss this. The sheer magnitude of the sample size of data is astonishing. Analysing new house and land packages constructed in Queensland, New South Wales and Victoria since 2016. 9,905 new house and land packages. These are real results backed by real data from real transactions made by Australian investors just like you in search for wealth generation through new house and land packages. In today's video, expose number 1 of 6, we will stress test the hypothesis that new house and land packages in the right selected areas has generated capital growth for Australian property investors. Mate, this is honestly the most serious I've ever seen you. I'm in journalist mode, mate. Pencil in the ear. Well, let's get right into it then. Now remember, there's just 2 processes that generate 2 returns that make up your return on investment. Capital growth and cash flows. And today we're going all in on 50% of the property investment game. Capital growth. Capital growth results, in fact, for new house and land packages. To best structure this approach, we have broken down this video into 3 key elements. And key element number 3 is gonna blow your socks off. Key element number 1, the data that is presented to you on capital growth. Capital growth housing. Let's face it, if you're entering the property investment market, there's a good chance you've flipped through the data columns in the magazines, other online portals. You're probably still getting emails from investment companies about the capital growth of housing in a particular region. But when you are shown that capital growth rate for the region, what does this really reveal to you? Tainted data. Think about it. It takes into account both new and established housing, yes? It's not an accurate indicator as it does not differentiate which type of property is doing the rising, which type has been plateauing, and which type has been falling. And you know what else is severely tainted? House median value. This is another data bubble that needs to be popped. Once again, it includes both types of housing, and hence it's a tainted sample size. You might have an area of 3-bedroom established home selling for $400,000. Then suddenly you have a new, shiny 4-bedroom homes for $600,000. And now due to this, the median house value is now $500,000. It does not define the median house value of each type. Therefore, we can't rely on this property metric. The only logical way of analysing the performance of a new house and land package is by looking at what new house and land packages have sold for since they were first built. And let me tell you, mate, the sheer amount of level of expertise and detail of this analysis makes it a definitive analysis for that time in the market. In property investment, data is quite often considered the key to unlocking real wealth in property investment. So what's the problem with that, you ask? Well, in a document I obtained on a secret mission, which, mate, I actually had to get into a gunfight to get this document out. Hold a second. You were just riding an elephant and now you're shooting guns in a shootout. You're not just using old footage to make this investigation seem a little bit more dramatic, are you? Nah. Let me show you the top secret document. Which brings us to key element number 2, real results. Of 9,905 new house and land packages built since 2016, let's take the biggest sample size for hotspots, which would be the Brisbane hotspots to be precise. 1,061 new house and land packages. Here is a Greater Brisbane map that displays in red the top 20 suburbs for new construction growth since 2016. Note, this is not capital growth. This is construction growth. The top 20 suburbs for new construction since 2016. We're talking Pimpama, Coomera, up to Logan Reserve. Continue on to Mango Hill, Griffin. It's all here on the map. Remember, these are the best areas with the best storylines, where the hotspot reports were directing investors. New housing estates, near Westfields, proximity to universities, population growth centres, new train lines, highway upgrades. So now, let's look at the results. .86 median % capital growth. Here is the 0% line. Here is what we call the underperforming area in maroon. Let's even go out further. Let's go to the outer hotspots of Brisbane. Oh, hardly better. But do you know what's really scary about this? Forget the pathetic returns. At least they're staying afloat for now. Look at this red area in this top secret document. Look at the percentage of people who have made a loss. Still, after 5 years, have negative equity. This is scary. This is crippling property portfolio performance. This is possibly an insight into financially ruining outcomes. We could go on. In fact, let's just put up Sydney's hotspot for the doubters. Yeah, now let's move on. So you've seen the problems that taint data. You've seen the actual results. Now let's get to the missing piece, key element 3. Socks are coming off. Have you stopped to think, if you're going to buy a new house and land package, you're buying the problem. Price pressure, simple supply and demand. If you're buying established, you're not creating supply. In fact, you're part of demand. If you buy new house and land packages, you're creating supply. If you, and even worse, if a lot of you are buying new house and land packages in the one area, you're creating the supply. And what happens when supply outweighs demand? No growth. You know, not a lot of people have seen it from that angle. And when you think about it, that's insanity, mate. You're buying the problem. Who's bad? This period of time was just a slow time in the market. Okay, so with new house and land packages, you have a limited amount of available locations. With established, as long as there's a listing, potentially any state, any suburb, any street has the potential for you to make money at any time. 15,000 suburbs of opportunity. There is no slow time in the Australian market. There is only individually rising markets and individually underperforming markets. We're just saying. As per the Australian Bureau of Statistics, 80% of properties purchased are new house and land packages. Ah, finally. Well, that's got to be good. Also, as per the Australian Bureau of Statistics, 90% of all Australian property investors get stuck at 1 or 2 investment properties. I don't smoke, but holy smokes, that's a strong correlation. If something was working, all right, if you had a perfect pokie machine where every time you put in $1 and you get back 2, you'd keep doing it, right? Well, according to this secret document and the data that it's provided, overwhelming majority don't. And hold it. Mate, have you just glued top secret onto this paper to make it look like a more dramatic investigation? Oh, allegedly. Mate, this data comes from RIPEHOUSE Advisory's buyers agents. This is from high-level research analysts and economists. You didn't really ride into the jungle and have a shootout, did you? Look, come on, mate. We need the drama. We need the subscribers. We need everyone watching, if they haven't already done so, to hit the subscribe button. Gracias. Well, you've got to source it, mate. You've got to give them credit. This is high-level research analysis from RIPEHOUSE Advisory Buyers Agency. Fair square, mate. Okay, mate. Did you know that RIPEHOUSE Acquisitions only purchase under market value properties for their clients, and they handle all the negotiations for you and prove it with a registered property valuer? Then they create an uplift in value. Literally equity, which the banks love. By having an in-house renovation team that not only analyse a property's potential for renovation, but they carry out the renovation for you. That's right, they do the renovation, further driving up value into your investment. And of course, they've already made sure the property is a cash flow positive property, but with the renovation being done, up goes the rent even further, creating surplus cash flow to not only assist your serviceability, increase your rental yields, but also help build your property portfolio. And then of course, they've already made sure the location of the property and the property type ensures high performance market growth. That's money from a single property in 4 ways. And what do you have to do? Make one mouse click on the link below to book in a free quick wealth consultation to see if you're a good fit. They do it all. Think about that in terms of effort. Dumbbell raise, wealth creation, everything done for you. They do it all. Or you can go the new house and land route. Just being fair. Click here, and you want to click here for expose number 2 and watch it now, because we're going to further identify any red flags so that the red flags don't turn into a white flag of financial failure.
Peter Harvey, Canberra.